Thank you very much, David, and thank you, Jeff, for being here with us today. Appreciate you joining us as always. I just want to kind of drill down into some of the sales results that we saw here. Really strong numbers, but of course we know inflation is playing a part in your numbers as well as retailers and other companies across the board. So help us sort of understand more about what went on to the numbers. Are consumers buying more? Is unit growth higher? And how does average unit retail factor in?
Yeah, Courtney, great to be with you, and thanks for having me on. What I tell you is that the state of the consumer right now is that they're healthy. And, what I saw during the last year and during the pandemic as we kind of are emerging from it are those categories that were very, very strong, continue to be strong all the way through the pandemic. And those dormant categories during the pandemic have really kind of bounced back. As you saw from our post, that average unit retail was up about 11% in 2021. I expect it to be about half that in 22. And we do expect inflation. And what we're always focused on is the customer is the winner here. We want to make sure that we respond to all the customer needs. And we've got lots of opportunities to improve on our margins because of all of our data science that we're deploying now versus where we used to be. So we're buying less, we're sourcing better, we're using all the customer data that we have, we're using personalization, we're marking down better. At the end of the day, we're ready for whatever inflation comes our way to continue the trends that we started in 2021.
So the customer certainly is one stakeholder you have to listen to, but so too are shareholders. And there were a number that were interested in the exploration of spinning out e-commerce, separating it from the physical store, the legacy business of Macy's. You've said today that the determination with the help of AlixPartners has decided that is not the go-forward plan for Macy's. Can you explain why that is a little bit and why that makes sense? Is that the reason why JANA Partners, the activist investor, lowered their stake? What should shareholders understand about the growth potential for Macy's as a combined unit going forward?
So first off, the board and management looks at the whole opportunity for value creation all the time. And we certainly intensified our efforts, and we brought in AlixPartners to just pressure test it again. We had two big objectives. One was, how are we going to show short, medium, and long-term shareholder value? And we wanted to make sure that the omni-channel behavior of the customer was respected at all touch points. And in every single scenario we looked at, and it was a very comprehensive, unconstrained review. We didn't put any parameters on it. We really asked our advisors to come back and look at everything. And what we came back with was that United Macy's, Inc., which included the nameplates, operating as a integrated company versus a separated digital and brick and mortar made the most sense. And, we looked at that with the board. What was convincing to the board was really three big factors. One was the separation costs. One was the additional costs that you get with operating separated digital and brick and mortar businesses, as well as just the execution risk. And what it also gave us the opportunity that was to pressure test Polaris, our strategy of record, for other opportunities we could to accelerate items in Polaris to drive more shareholder value. So that was digital with Marketplace. That was what we're doing with personalization and what we're doing with our loyalty program, what we're doing with our off-mall format, as well as what we're doing with new and exciting new categories. And what I'd say is that at the end of the day, Macy's is a much stronger financially able company than we were before the pandemic and before the Polaris strategy was launched. And when I look at that, when you think about the free cash flow that we're going to generate over the next 3 years, $3 billion there, we have $3 billion going to CapEx. We are not capital constrained to address the needs of our business. So that was the conclusion that we reached.